Loma Linda, 1050 AM, 106.5 FM, and now 102.3 FM.
Okay, welcome to the Real Man of Real Estate. I'll be your host today. My name is Raphael Davis of D&D Capital Solutions. I'm actually here in the studio with my partner, who's also a co-founder and co-CEO of D&D Capital Solutions, but he also has Your Darling Lender. So, and that's my man, my best friend that I've known for many, many years. That's Stephen Darling.
How we doing, guys?
All right, how you doing today, Steve?
Doing good. Happy to be here. Appreciate the opportunity to be here, and looking forward to just talking about what we do each and every day.
Oh yeah, absolutely. So you guys, what we're going to do today is just going to be, we're going to cover real estate. We're going to talk about some different things in real estate, and that's what we're going to do. So that's what we're doing here with the Real Man of Real Estate. So we want to connect with you, the listener, and basically kind of tell you our take on the market with the years of experience that we've had. I personally, I've been a real estate agent since probably about the year 2003. So I've seen markets, come and go up and down in the different markets like that. My man Steve here, my partner, he's been a real estate agent who's now a broker and owner, and he was unique. He worked both sides of the coin here in real estate. So being here in California back in the day, for those who are listening who may remember, but once upon a time, you didn't have to have the NMLS license. So when you were initially licensed in real estate, you can do the loan as well. So once you got your real estate license, you took care of the loan and you took care of the real estate part. So Steve and I, we are from that era. So I know that the new crew, you guys don't get a chance to see that because we don't have that anymore, right? Because there's all these licensing and different things that you have to do now. In fact, Steve and I was just talking the other day about how long the real estate contract itself has gotten. When we first started out, it was just a few little pages, like 3 pages. You remember that, Steve?
Yep.
About 3 pages on the real estate transaction, and now how many is it?
Oh, geez. I mean, to the initial, just the typical contract that goes out is about 20 pages.
About 20 pages, right? And that's up from 3. When we started in this business, it was only 3. Okay, so getting into the show today, we want to kind of address what everyone's talking about, right? So everyone out there, the first thing you hear is rates. What are the rates? Where are they going? They're climbing. We've seen since 2021 how rates have shot up, like almost it seems overnight, even though it wasn't overnight, but they shot up and they shot up fairly quickly. What's your take on that, Steve, for the listeners?
And you're 100% correct on that. It's, everywhere I go, Raphael and I are both family men. We go to sporting events, we go to family events, and everyone's always, they know the business we're in, and they always ask us, what's happening, where are things going, where's the market headed, are we going to a recession, what's up with inflation, where are the rates, what's going on with the rates, all that kind of stuff. And so, why have mortgage rates jumped over 5% in the last month? By the end of last week, there was a shred of hope that the worst might be over for 2022. It's a massive rate spike. But by Tuesday of this week, however, that hope was shredded. Things only got worse from there. To understand why, we have to revisit the general motivation for the rate spike.
Right.
Before we do, let's put massive in context. It's not an overstatement considering that this is the biggest, fastest jump in mortgage rates since 1994.
Wow.
That is insane. And for that, why? It's actually fairly straightforward. The Federal Reserve, which everybody calls the Fed, is the best known for setting the Fed fund rate, which dictates the cost of the shortest term financing. It raises and lowers the rate to try to persuade inflation and employment to remain in certain ranges. And one of the reasons I'm explaining all this is because to the every average person, say you're a mechanic, a doctor, a nurse in the military, you understand and you do a job. On our side of the business, everybody always wonders, because the housing markets is always a conversation, is always a topic. So I wanted to kind of share these things so that people kind of got an understanding, just a slight understanding of what it is that creates the rates and why they're there, and how it drives the market due to inflation, etc. And so the Fed is the one that kind of decides of this based on the bond market, short-term financing.
Right.
As mentioned, it raises and lowers that rate to try to persuade inflation and employment to remain in certain ranges. In cases where the rate is cut to zero and the Fed thinks more needs to be done, they buy bonds. U.S. Treasury and mortgage-backed securities is what people in the mortgage business constantly talk about. Buying bonds creates excess demand in the bond market, which in turn pushes long-term rates lower. It's basically a way for the Fed to influence both short and long-term rates.
Are they still, I'm sorry, I didn't mean to cut you off.
Go ahead, no, go ahead.
Are they still in the buying right now? Is the Fed still buying a lot?
Nowhere near the amount they were. Like about a quarter of what they were.
Gotcha.
So at the start of the pandemic, financial markets were in chaos, and the Fed stepped in and cut the Fed rate to zero and buying bonds at a very fast rate. Rather than dial back those bond purchases when markets began to settle, the Fed concluded that it should continue providing as much money stimulus as possible in light of COVID's impact on the labor market. They justified this with the assumption that COVID-driven inflation would subside. As the pandemic subsided, as we now know, COVID-related inflation did not subside.
Right.
By the Fed's own admission, it drastically miscalculated the persistence of inflation and even the health of the labor market. As 2022 approached, we suddenly found ourselves staring down the barrel of the biggest inflation numbers in the tightest labor market in decades. Meanwhile, the Fed still has its Fed rate at zero, and people are buying like crazy. Rates are super low, refinancing like crazy. They were buying $100 billion a month in bonds in 2021. That quickly changed. The Fed began to wind down the new bond purchases, and are all the way down to about a third of that right now.
From what was the number?
$100 billion a month. Yeah, now they're looking at 25 to 30, and I think it's going to go even lower. A few months later, that inflation continued to surge, and the labor market grew tighter. The Fed began accelerating its exit from easy money policies, but much like a battleship in a river, by early 22, the Fed's communication spoke to a certain level of panic not seen since the 80s. The Fed does not like to make big course corrections once it starts to take that proverbial turn.
Gotcha.
But in 2022 has seen those sorts of unexpected accelerations one after another. This rapid rethink and rapid removal of bond buying from 100 down to 25 demand on part of the Fed is the key ingredient in the spike for rates this year. So that's long-winded, a lot to it, but people need to understand why and where and how the rates are going up.
Right.
So many things are so different about this economy and the monetary cycle that the past precedents may not be as useful as they normally would be. You know, we look to the past to try to gain knowledge or wisdom, but what has occurred now is new, it's different, it's shifting.
Right.
And it could take us months to get back to what they hope would be the normal rate, but the Fed is now hiked up to 5.1, which when rates were at the low twos, the Fed was at about 2.75. Well, now it's at 5.1.
Right.
In my opinion, we are looking at 6 this year, maybe 6, 7 within the next 2 to 3 years, 6, 7, 8 maybe. Mortgage apps are down, building permits are down, home sales are up because of the law of supply and demand.
Right.
Supply and demand is still strictly, it is governing what is happening in our mortgage world or mortgage market. Conventional, people are selling high, buying high, it's apples to apples, but something's going to turn, something's going to change.
Right.
And people don't like to hear that word recession, but, you know, not like, was it 2006? I lived it, I seen it, I dealt with it. We're going to be coming up to something strange, something weird, but a recession will happen, not anytime soon, maybe 2 to 3 years, maybe 5, I don't know, but it will happen, and something's going to change. Something's going to happen. I'm not going to try to predict.
Right.
But I know something will happen. What we do know for a fact is rates will continue to climb.
Right, right. I think it's important for our listeners to understand that, because oftentimes, you talk to people and everyone's talking about, hey, you know what? I'm gonna wait. I'm gonna see. I'm gonna wait. In the big realm of everything, the longer you wait, it seems like that's kind of like the more you're going to end up paying, right? Because I heard people say, well, when rates were down to two and a quarter, 2.5, 2.25. I remember I used to talk to people because I've been blessed to be on both sides of the fence. So I do the private money, but I can also do the conventional, as us being partners. And I would talk to people, even family members, and be like, hey, listen, now is the time. We're seeing historical low rates. Rates haven't been this low since like 1979, I believe. Don't quote me on that, listeners. I may have the wrong year, but 1979. And then there was a little stint in like 2012. In 2012, I remember rates went down to like 3.25, and some people were very lucky during that week because they were able to lock in their rate, and it was low. It was low, and
it
of
didn't
course,
last like it did.
It didn't last
like
at all.
this time.
It kind of just rebounded and went right back up,
Yep.
and people waited, and so now people are still waiting. I had a guy call me the other day, and hey, Raphael, man, I've been seeing these rates going up, and I don't think they're gonna, stop anytime soon. I should go ahead and try to refi and pull some cash out of my house, and I had to tell him, I'm like, well, hey, man, let me tell you, it's much different from when I spoke to you 8 months ago. Things have changed. It's not. I think back in 8 months ago, I was telling him it was like 2.5, and now I think when I pulled it up and looked at it, it was like may have been like right at 4.2. I think with no cost. No, was it 4.2? I can't quite remember. But I tell you what, I'll think about that here in just a second. So let me get ready, and we will go to a quick commercial break. We'll come back. Again, this is Raphael Davis with D&D Capital Solutions, sitting here with my partner, Stephen Darling of Your Darling Lender, and Darling Homes and Estates, which we haven't touched on yet, and also the other half of D&D Capital Solutions. We'll be right back after this break.
Fire Up Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections, hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. Fire Up Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. Fire Up Connect, helping success stories unfold every day.
The toughest part in the lending process is patience. Like I tell all my clients, once you get those keys in hand, it'll all be worth it.
Everything that they said they were going to do, they did. I saved so much money working with First Lending Solutions. I love my new house. I couldn't be happier.
So reach out to me at First Lending Solutions so I can help you get started.
You can contact Defina Miller with First Lending Solutions at 951-973-0123, definamillermortgage.com.
I love how New School is able to help me greatly with my career
because they actually have experience working in the field. The greatest thing about New School is the fact that there are so many different disciplines, which allows you to really understand and get a good insight into different types of design. And I think it's that whole changing mindset of what design can really do for a city, and this is kind of the place to be.
This environment cultivates creative thinking.
Hi, this is Steve Matley. As a construction professional, I know the importance of selecting the right contractor for the job. Power Solar employs only professional installers. Power Solar will provide a knowledgeable consultant to help analyze your current electric bill, identify site placement, and correct solar technology for your home. Contact KCAA Producer at gmail.com for a free financial savings proposal with no obligation, or call 951-551-1350 and ask for Ken. Again, that's KCAA producer at gmail.com or 951-551-1350 and ask for Ken.
Okay, Raphael Davis, D&D Capital, back here on Real Men of Real Estate with my partner, Stephen Darling of Your Darling Lender. Right before the break, I was telling a quick story about the gentleman who wanted to refi now. I mean, of course, there are still chances to refi at this time. The only difference is it won't be at 2.5% is what I had to let them know. So we missed that. You know, we were at historic lows and we were telling everyone that, but no one was listening. You know, it's kind of almost like sometimes they feel like you're trying to sell them something, and that's not it. You know, what we're doing, we're in the business of providing information for people. And, you know, I've always lived by the more people I help, of course I'm going to, you know, make money to take care of my family. But, you know, the more I help, the more money I would make. The more money I make means it was the more people I helped. And if I'm not able to take care of my family properly in this business, that means that I'm not applying myself enough to get the information out there and to really, really help people. And that's what we're in the business of doing. What is your take right now? What do you think everyone's asking? What's the questions people want to know right now on the conventional side of things?
Well, you know, the understanding is that everyone knows rates are gone up. They have gone up. They've gotten quotes, this and that. And they, you know, there's a lot of different questions that are suitable in regards to that. You know, people want to make sure that they work with the right lender. On our end of things, you know, it kind of always sounds like a sales pitch, but it's the honest to God truth is we will always give you our best. You know, I just actually referred one of my clients to another lender because they had a crazy program that came from a portfolio, a special portfolio program that only that one bank had. And I referred him to them because it was a better deal for him and his family. That's the type of stuff that he'll come back to me in the future, or he'll refer me business because of what I did for him now. And then it's kind of just an outlook on how we try to conduct our business each and every day is we're always going to do our best. We have the opportunity. We're direct lenders. We've been approved for, I'm not going to tell you how many, but many millions of dollars of a line of credit that we get to use to lend, obviously within Fannie and Freddie guidelines, but we get to lend that for mortgages, for VA and for conventional. Not FHA because it's a separate product, but obviously we can do FHA. But people, you know, what is it that they need right now? Right now it's cash out because the equity is through the roof. Things are going to change, guys. Prices are going to, you know, right now, let's say, for instance, you know, I'll use a personal instance. I don't know if I'm supposed to do that or not, but I bought my house for $400,000 in 2013. It just appraised for $950.
Wow.
Over double. In, what is it, 8-9 years, right? And the rates have been a fluctuation of 2% total within that total range. And now it's the time where I can pull out some money. I can do repairs to the house, upgrades, you know, do that kitchen my wife always wanted, that kind of stuff. You know, or it's the other side of the coin where you're selling a property, you know, you're getting a big chunk and you want to use that to keep your mortgage in a relatively affordable position. So you use a bunch of that money to put down on your next owner-occupied purchase. That's really where everything's happening in the conventional world right now. But the thing that most people are not understanding is what's available. There's these what's called non-QM, because a qualified mortgage is the regular 30-year fixed, conventional 700 FICO plus score, you know, W-2 employee, bank statements, all that kind of stuff, and you qualify based on your debt-to-income ratio. Well, now you got non-QM, which means you can have 550 credit score, be self-employed, go off of bank statements, go off of rental returns. There's all these different amazing programs that are available that we have. Got every single one of them that's out there available. We have it that we can help you with, that we can at least inquire for you on behalf of. But now is the time if you need to do a kitchen remodel, bathroom remodel, you need to do a driveway, you need to add something to your house, you want to do an ADU. They haven't come up with special ADU financing yet. It's all part of your property, so you need to on the conventional side anyways, pull the money out that is there now at a reasonable rate before they go up too high, and use that to do those things. Pay off your debt, pay off student loans, whatever it is that you need to do. This is the best time to get money at what is still 5% is still a good rate. According to the, if you look at that whole timeline of interest rates from 30-something% down to 1.99, which we got a friend of ours, 1.99 VA loan, was absolutely amazing. Lowest rate I've ever seen in my life, and we got the opportunity to help a family get that, and it was amazing.
I remember that.
But really,
2.1
long-winded. But the two things is cash out and purchase loans. That's where the conventional side, FHA, VA, but don't forget the non-QM. There are products available to help you get into your first home if you need it. Just let us know. We'll look into it. We'll help fix your credit, whatever the case may be. We're in for the long haul. We'll start at point A. It may take a year, 2 years, 10 years, whatever the case may be, but we will be here to help you through that. And that's kind of how we focus and engage our business, is through honesty and just being like a brother, like a sister, someone there for you that you can count on, you can trust, that's not going to steer you in the wrong direction. And we're just continuing to expand in those directions. We have the availability to hire a bunch of people, but we don't, because we like to stay hands-on. We will expand, we will hire others to help us. We've got a few working with us now, a few agents, a few loan officers, but we like to keep our eye on the prize and make sure that you get the best product, the best job is done for you. And so we stay hands-on. We work hard to provide for our families, and that's part of this business, is part of accomplishing and building a business. My American dream was owning a business, and I'm in the midst of it with my best friend, and we're trying to do all we can to help as many people as we can so that we can help our family.
Absolutely.
I can talk all day.
No, absolutely. No, and that's what, the people need to hear. And I'm so glad you're breaking it down that way. Two things out of that, I'm gonna have to answer to my wife, since you threw out there about fixing the kitchen. So she's definitely gonna hit me up about that. I could already hear it coming when she hears this. I heard Steve say they was fixing the kitchen. Why haven't we fixed our kitchen? So I'm gonna have to deal with that one with my wife here pretty soon. But one thing I want to touch on real quick, what you mentioned, is when you say if it's 1 year or 2 year, to us that doesn't matter. So a lot of times when I talk to the people, I tell them, say, look, we're going to build you a profile. And that's basically what we do. We see exactly where you are right now on the conventional side of the house. We see exactly where you are right now, tell you exactly what we can do for you. And if it's not time for you at that time, guess what? It may be time for you in 6 months. It may be time for you in 12 months. It may be time for you in 18 months. The good thing is, once you let us take a look at it, because we have to see everything. You know how it goes. We take a look at the whole profile, we start to build it, we see everything, and then we go from there. And next thing you know, someone's happy because 2 years ago they had no idea they were going to become homeowners, and now 24 months later we've already gotten them in the house. Which is, I haven't touched on it too much yet, but the good thing about being with my partner Steve here is, Steve, like I said earlier, when we started, we were able to do both sides of it. So there was a time when I stepped away and did some other things, but Steve stuck with it. And then one thing I can point out that I see that we do as lenders that a lot of people don't do is, because of the background and the extensive knowledge that I've seen you have when looking at contracts, it makes it so much easier. And we work with realtors a lot, in terms of helping them. Actually, I've seen you tell real estate agents, no, do it this way, write it this way, make sure it looks this way so that it goes this way. And that's coming from a lender. A lot of other lenders probably wouldn't do that. But one thing I think I can pride for us is we show you how to get the money that we have. We make sure that you understand, look, it needs to be this way so we can fund this project for you. I'm kind of dipping over into the private a little bit because we do it on both sides, but that's one good thing on the conventional side. And before I forget, before I slip my mind, you touched on the VA loan. Didn't that recently change? Is there a cap or is there a limit to the VA loan, just in case we have some military personnel?
We're really lucky in Southern California. There's been lots of changes. There's certain parameters when purchasing VA non-allowables, which is no longer much of an issue. They're just they're put on the closing costs settlement statement a little bit differently so that it puts you in a better position to negotiate against a conventional offer. But to answer your question, there is no cap, and we can do 100% cash out refinances with a VA loan. And if you have 11% plus disability rating, no VA funding fee, all of those types of things have been expanded on, which makes it absolutely amazing in this finance world. Just like jumbo loans. 6 months ago, God, it was about 6-8 months ago. Time flies, so it's hard for me to remember. But within the last year, you couldn't get a jumbo loan. It was darn near impossible. You had to go to a big bank like U.S. Bank, somebody that personally funded it.
Right.
But now, jumbo loans are superseding that of availability for regular conforming conventional loans. Everybody is making it available to get jumbo loans because they know, especially in Southern California, the price of housing and the equity market has drastically changed. And so now we've got conventional, VA, FHA. You know, there is that rare, I hate to say it, down payment assistance, because in this market, no one will accept your offer, but it is out there. We've got all these special programs that will and are continue to expand on and will be very much available. But to answer your question, yes, 100% VA cash out refi.
Gotcha. Excellent, excellent. Well, hey, you know, there it is, breaking everything down from that standpoint. We're going to take a quick little break again, little commercial break, and then when we come back, we haven't talked much about it so far, but we will start to jump into a little bit of the private money side because Steve and I, we actually do all of that. So we have both sides of the house going. So as soon as we get back, I'll go over what we offer at D&D Capital, everything we were just talking about. We also offer through Your Darling Lender, and I'll bring you up to speed on that. So we'll be right back after this break. Talk to you soon.
Fire Up Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections, hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. Fire Up Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. Fire Up Connect, helping success stories unfold every day.
The toughest part in the lending process is patience. Like I tell all my clients, once you get those keys in hand, it'll all be worth it.
Everything that they said they were going to do, they did. I saved so much money working with First Lending Solutions. I love my new house. I couldn't be happier.
So reach out to me at First Lending Solutions so I can help you get started.
You can contact Dafina Miller with First Lending Solutions at 951-973-0123, DafinaMillerMortgage.com.
I love how New School is able to help me greatly with my career
because they actually have experience working in the field. The greatest thing about New School is the fact that there are so many different disciplines, which allows you to really understand and get a good insight into different types of design. And I think it's that whole changing mindset of what design can really do for a city, and this is kind of the place to be.
This environment cultivates creative thinking.
Hi, this is Steve Matley. As a construction professional, I know the importance of selecting the right contractor for the job. Power Solar employs only professional installers. Power Solar will provide a knowledgeable consultant to help analyze your current electric bill, identify site placement, and correct solar technology for your home. Contact KCAA producer at gmail.com for a free financial savings proposal with no obligation, or call 951-551-1350 and ask for Ken. Again, that's KCAA producer at gmail.com or 951-551-1350 and ask for Ken.
Okay, Raphael Davis back with my man Stephen Darling here on the Real Man of Real Estate. Continuing the conversation, we've covered a lot of ground, so if you're just tuning in, we've given out a lot of valuable, what I consider to be valuable information, and we was able to pick my partner's brain here, Stephen, who's been in this business for 20 plus years, working both sides of the fence. I personally stepped away for a little while, actually to do martial arts. So I focus on the private money side. My nickname is the Hard Money Black Belt. But now that hard money, I like to put at the end of that to beat because we have a lot of financing options that's very, very hard to beat anywhere out there. So we were just finishing up the last segment with VA. Is there anything else you need to say about that VA part, Steve?
In regards to, well, just kind of understanding and looking into the purchase side of things, right now, super competitive market, right? The average in North San Diego County is $65,000 above asking price, coming out of pocket, not just offering it and making a contingency, but people are paying anywhere from $60,000 to $90,000 out of pocket extra on top of their down payment to get into properties, and we know that it's hard to swallow. So, I myself have done over 1,000 real estate transactions. I know the contract in and out, and so one of the tools that I've gained there, and to be completely humble as possible, is I've got the experience. I've done it 1,000 times and a few thousand loans. So if you're working with a realtor or you're a realtor and you're listening, we have the tools, the ideas, the specifics, getting creative to help you get your offer accepted. There's a lot of different ways, and there's a lot of different realtors out there that are getting creative, that are intelligent and doing a great job. But there are a few things that unless you are a lender, that you're going to know. And there's things that we can advise on and help you structure and put together and understand when writing your offer so that you get it accepted and maybe not have to come out of pocket $1 jillion to get that property, because eventually the market will come down. It will always go back up. You buy for 800, say it goes down to 600, and then in 5 years it's at $1 million. You will always gain equity, always. It just takes time. Real estate is the number one investment in the world. Just give it its time.
Right.
So in regards to purchasing real estate in Southern California, if you're a realtor or you're looking to get into the market for the first time, sell, get into the market for the second time, whatever that case may be, we have some very unique negotiating tools that we are available and readily accessible to contact and to help you guys get your offer accepted, because we know how extremely frustrating it could be writing 5, 6, 20 offers and not getting that property that you love, that you want your husband to have, you want your wife to have, you got a new kid coming, or you've got kids that you want to get in a certain school district, whatever that case may be. We've got the tools to help you and possibly give you some strategic advice that might help you get that property that otherwise might not have been able to get.
Right, absolutely. And when it comes to negotiating, those things matter. Writing a good offer matters. And hearing that coming from lenders, because we know the real estate doesn't take place without the money, or some refer to it as without the debt. You don't really have anything. So to have someone that can negotiate for you and help you, and also let me point out to the realtors, guys, just because we also do real estate, we typically do that for family and friends. You never have to worry about us ever doing anything to your clients or wanting to take your clients. A realtor in confidence shared that with me. He said, Raphael, you talk really well. I know you do private money. I know you do conventional lending. He said, but, there are people, and this is kind of how he told it to me. He said, there are people who worry that, if they're not doing something right, maybe that you would just, take the client. And I'm saying, man, first and foremost, we operate with extreme integrity. And like I mentioned before, like Steve mentioned before earlier in the segment, we're both family men, and that's not how we operate. So that's something you never, ever have to worry about whether you've signed a contract with them or not, because we want your repeat business. We want you to always bring us business. Whenever something comes up, whether you're an investor, a first-time home buyer, a FHA buyer, if you're looking for things real estate, we want you to think about Raphael Davis and Stephen Darling of D&D Capital, your Darling Lender, and Darling Homes and Estates. We cover everything for you. One thing I wanted to back up, actually I don't want to back up. I want to touch on the San Diego market real quick, because you were saying how everything is going up and how everything went up. You know, I was just recently looking at the numbers that came out from the month of March, and detached properties, that's a property that's not, you know, a condo attached to anything, they rose by 20+%. Attached properties rose to 20+%. I think the median home price right now in San Diego County for a detached property is like $975,000. I believe that's the median price, and for for like a condos or attached properties, it's like $624,000 or something like that. And I remember earlier when you mentioned how the property had rose, you know, if you remember, Steve, actually my partner here, was my realtor when I bought a home back in 2012. You know, we shopped around. You remember that? We shopped around, we went looking, we saw a couple. My wife liked some of them she didn't like, and we got a smoking hot deal. I think I bought it for about $300,000,
Yep.
and that property just recently appraised for $755,000.
That's right.
Yeah, in less than what's that, a decade?
Yep.
About a decade. So that's another good thing about being here in Southern California. Real quick, because I know time is going. One thing that was mentioned to me recently, and that was a family member of mine actually. Was concerned whether or not they can buy a property or qualify for a loan because they had student loan debt, you know. And I explained to them that that's not going to stop you. Can you touch on that for
student loans? Are actually, man, it's a huge topic. It's a uniquely crazy topic because there's so many changes that have occurred with student loans. Mm-hmm. They used to be able to write them off in bankruptcies, can no longer write them off in bankruptcies. You know, student loans, when it comes to loan financing or mortgage, to be more specific, underwriters are not going to pass over it just because you have a deferment or a forbearance or a written agreement that says you don't have to pay for it for another 2 years until you graduate or whatever. They want to see, they have to include something in the calculation. When it comes to Freddie Mac, it's usually 0.5%. When it comes to Fannie Mae, it's usually 1%. And usually, if you've got about $100,000 in debt of student loans, that is $1,000 a month payment for Fannie Mae. It's $500 a month payment for Freddie Mac. That hits your debt to income ratio very hard. So, if you call each company, or you know, Nell Loans or whichever student loan company it is, and you set up a repayment plan for $20 a month, $50 a month, something very low that may not even come into effect for another 2 years, that is what is going to get incurred into your debt to income ratio, and that is what the underwriter is going to look at to approve you. That is very important. So you always want to make sure when thinking about buying or refinancing that you set up a very low repayment plan with your student loans, and that'll help you be able to accomplish and achieve what it is that you're trying to accomplish or achieve when it comes to refinancing or purchasing. You don't want that student loan debt to get in the way, but it definitely will not stop you from refinancing or buying a property.
Excellent, excellent. So many people, that's like one of those myths that are out there. They think, oh, well, I can never qualify for a home. I have student loan debt, right? Or I've seen it on the other side when people want to refi. Well, I don't think I'm going to qualify for a refi because I have student loan debt. And what I'm finding and what I'm seeing, which we've also saw together, you know, a lot of people put them in long time deferments, right? Because they're not paying on them at all, right? But they still have to be taken into account, you know. It's no way to get around them. You know, you have to address them. I've kind of seen the same thing happen a little bit with people that are old in the IRS, right? if you owe the IRS, that does not automatically disqualify you or stop you from qualifying or, making a home loan purchase. All you have to do is just make sure you have it set up with them, work out something with the IRS, have like a payment plan, right? And then you can proceed and you can move forward.
We need one statement from that. You set up $100, say you owe 10 grand to the IRS.
Right.
$100 a month payment plan, it comes in the mail, and you show the underwriter that. Now that's only $100 getting held against you in your debt to income ratio, instead of having to try to figure out a way to pay $10,000 to IRS to buy a house or to refinance. Now you can accomplish what you're trying to do. That IRS debt is not going to hold you back from doing that. For that exact point that Raphael just stated, is you set up a payment plan and you're going to be good to go.
Right, there it is. Everything changes. You set up that payment plan and then you're good to go. So basically what I'm saying with that is, reach out to a professional. You can definitely reach out to us, yourdarlinglender.com, dndcapital.biz. Reach out to us and we will show you exactly what you need to do. Basically, don't let anything stop you, guys. Like we're in a great time. We're in a great position. Right now in this country, I know there's a lot of things going on. We're coming back from the pandemic. My heart goes out to everyone who lost loved ones and in the pandemic. And I know people are still dealing with the COVID pandemic and things like that. But, I shouldn't say but, because that negates it. We're still getting through this and we're moving forward, as a country, as individuals, as companies. We're doing everything that it takes and we're making it happen. So I want to take one more quick break here from the Real Man of Real Estate. We'll come back. I'll tell you how to get in touch with Stephen and myself and what needs to be done. I know I mentioned we were going to get into private money, but what we'll probably do is, just tune in for that next show and we'll get deeper inside of that realm. So we'll be back right after this quick commercial break.
Fire Up Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections. Hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. Fire Up Connect also offers virtual assistance with a wide range of services, including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing, and much more. For more information, head on over to www.fireupconnect.com. Fire Up Connect, helping success stories unfold every day.
The toughest part in the lending process is patience. Like I tell all my clients, once you get those keys in hand, it'll all be worth it.
Everything that they said they were going to do, they did. I saved so much money working with First Lending Solutions. I love my new house. I couldn't be happier.
So reach out to me at First Lending Solutions so I can help you get started.
You can contact Defina Miller with First Lending Solutions at 951-973-0123, definamillermortgage.com.
I love how New School is able to help me greatly with my career.
Because they actually have experience working in the field. The greatest thing about New School is the fact that there are so many different disciplines, which allows you to really understand and get a good insight into different types of design. And I think it's that whole changing mindset of what design can really do for a city, and this is kind of the place to be.
This environment cultivates creative thinking.
Hi, this is Steve Matley. As a construction professional, I know the importance of selecting the right contractor for the job. Power Solar employs only professional installers. Power Solar will provide a knowledgeable consultant to help analyze your current electric bill, identify site placement, and correct solar technology for your home. Contact KCAA producer at gmail.com for a free financial savings proposal with no obligation, or call 951-551-1350 and ask for Ken. Again, that's KCAA producer at gmail.com or 951-551-1350 and ask for Ken.
Okay, Raphael Davis here with Stephen Darling, and we're returning with the Real Man of Real Estate. So if you're just tuning in, we covered a lot of information over this last hour. We will try to recap some of it. You know, of course, we can't go back over all of it, but we will recap some of it, some of the important key points, you know, just in case you missed some of those things. I'm just basically sitting here having a conversation with my best friend and partner here, and we've covered a lot. And one thing I do want to be clear, I think right before the commercial break, I gave you a web address where you can actually reach us. So let me say that again just to make sure that I have it clear. So that's www.ddcapital.biz. Again, that's www.ddcapital.biz. That's for the private money portion of our company. And for the conventional side, it's www.yourdarlinglender.com. Again, that's www.yourdarlinglender.com. And if you want to reach us, if you want to talk primarily about the private money, we could also be reached at area code 619-279-2522. Again, that's 619-279-2522. And if you want to reach us for the conventional, that's area code 619-504-9983. Again, that's area code 619-504-9983. So with this new world we live in and the new technology, it doesn't matter where you're hearing this broadcast from. Just call those with the cell phone companies now, and it's free of charge. Back when we were kids, that was a long distance call. so you don't have to worry about that.
When we got in this industry, there wasn't even cell phones.
Right? So everything has definitely changed. So just to recap real quick, just want to go over some stuff. I won't take a lot of time. Steve, I'll actually kind of let you start. Just kind of recap some of the things we highlighted, highlight a few things that you think the audience and the listeners definitely need to know and not forget.
Absolutely. It's funny just mentioning that there wasn't cell phones. I was just thinking when I was doing loans in real estate, you had to have relationships with each of your investors, and it's kind of transitioned back into that, which I like. That's one thing that's unique about us is we are direct lenders. We have millions and millions of dollars of a line that we get to use for mortgages. We are wholesale lenders and brokers, which means we can shop with all of the biggest investors in the country and find the best deal for you. If our direct line isn't low enough, then we go and find the lowest rate possible. So when it comes to competition, I can't guarantee we can be beat, but I can say it's going to be real hard to beat us, because if you give us something and gives us the opportunity to beat it, we can beat it. We have that power, Absolutely. That availability. Majority of loan officers out there, they do not have that availability because they're held to a specific comp. Us as owners, brokers, and direct lenders, we get to choose. We can make almost nothing and give you a loan and be okay with that, because we're helping an individual that we know it's helping and that we're going to get referred business in the future. Absolutely. Right now, this market, rates are going up. They're going to continue to go up. Don't sit still. If you want to do a kitchen remodel, you need to get money to buy a car, you need to pay off debt, you want to pay off student loans, whatever that case may be, get going now. Go to our website, yourdarlinglender.com, for the conventional stuff. If you need money on an investment, we'll get into more of that later, but that's ddcapital.biz. Give us a call, get in contact with us, and especially when it comes to purchases, talk to your realtor, or if you are a realtor, we have tools and the knowledge, the wisdom. I used to think when I got in this business, I was 22, 23 years old, out there talking to clients, and I thought, you know what, it doesn't really matter that guy's been in the business 10 years, 15 years. Well, I was absolutely wrong. Number one, young and dumb. But 20 years of wisdom in this business goes a long way. Absolutely. And we have continually pushed to progress. We're never going to stop progressing, and we will always do our very best to learn and to obtain and to understand as much about this industry as we possibly can, and we always guarantee to give you our best. So if you need anything, FHA, especially in the military, we cannot thank you enough for your service. 60% of our business is with the military. We absolutely want to help you. We love you, and we thank you for what you do. Please contact us. conventional, non-QM, bank statement programs, self-employed. If you had the courage to go out on your own and open a business and you're trying to get a mortgage, contact us. We're here to help. Anything that has to do with any of those things, we would love the opportunity to earn your business and earn your business for a lifetime.
Absolutely. Man, you heard it right there. I don't want to echo it, but I mean, relationships matter. You know, having good people working for you in this field matters. You know, what Stephen said about us being so competitive. You know, there was a time when I would tell people, and I say, hey, listen, just give me the opportunity, because that's what we look at it as. You know, we don't take it for granted. Anytime you come to us and this is a huge purchase and you trust us to do it, we want to do the absolute best job possible for you. But there was a time when I would just tell people, and I still tell them, I say, hey, look, I don't mind. Let me take a look at it. And while I'm doing that, feel free to go shop around if you need to, because, you know, that's one of those myths out there that, oh, you know, you're working with me now. And some people have said that, because not everyone, you know, has that type of integrity, but they'll have you believe that you can't look at other places. You can't shop around. They'll have you believe that, oh, you know, if you keep running your credit, it's going to go down. You know, you've already ran it with me. Now I have to do the loan, you know, and so they kind of bait and switch you, start you one way. And I'm not talking about any company or anyone in particular. We know this happens because the market overall largely has shown us that back in like 2008. So we know this kind of thing, these kind of predatory things happen, but with us, that's not the case. So I'll tell people, go ahead, feel free, shop around. I guarantee what we do, you know, and because, like Steve mentioned before, because we have millions of dollars to lend off, right, we can be very, very competitive and pretty much beat anyone. And all we, you know, want in return from you is just give us a referral. You know, we want to help you. We want you to get this. You know, it's a big, big thing to us. You know, we enjoy helping people. As I mentioned earlier, the more people we help, you know, the more we're able to also help our families. And that's the way we look at it. Steve, you got one last thing you want to say real quick before we wrap up?
No, I absolutely appreciate the listening ear. And if you need anything, please contact us. We get a lot of calls, a lot of questions, just statements, whatever the case may be. We're here to help. Please don't hold back. Email, call us, go to the website, however the method of contact works for you. Text us. We love to text. No issues there whatsoever. Just reach out, and we're going to be here for you.
Absolutely. And once again, that's www.yourdarlinglender.com, area code 619-504-9983, www.ddcapital.biz, area code 619-279-2522. Enjoy the rest of your day.
KCAA. Last July, several